Hello everyone. Today's topic is from Accountancy, Unit 1, Not-for-Profit Organization. Let me start with the meaning of not-for-profit organization. Not-for-profit organizations are those organizations which are established for a service motive and their primary motive is not to make profit. They are formed mainly to promote art, religion, charity, games, and for social upliftment. And the examples of these organizations are like schools, hospitals, clubs, and religious organizations. These organizations, they maintain their necessary accounts on the basis of double entry system of bookkeeping, which is similar to the profit making organization. That means they follow the rule of debit and credit. They also maintain the same books as the profit making organization, like the journal book, the cash book, and the ledger. And the way they record is similar to the profit making organization. At the end of the year, these organizations, they present three important financial statements to the members, which is slightly different from the profit-making organization. Like they make the receipts and payments account, which is a summarized form of cash book, and they make the income and expenditure account, which is similar to the profit and loss account of a profit-making organization. Then they also present the balance sheet, which is similar to the profit-making organization. Like we have the asset side and the liability side. Now the main difference between the receipts and payments account and the income and expenditure account are: number one, receipts and payments account. Receipts and payments account is a real account. On the other hand, income and expenditure account is a nominal account. So let me explain you with an example. Now this is an example of the receipts and payments account. Receipts and payments account is a real account. If it is a real account, the rule of real account says debit what comes in. So here, if you see, receipts are shown on the debit side, and payments are shown on the credit side. So according to real account rule, debit what comes in. Here, cash comes in. So subscription is a fee which is received from the members. So cash comes into the organization. So it is shown on the debit side. That means debit what comes in. So cash is coming in, subscription is coming in, so it is debited. And credit what goes out. Credit what goes out. If you see lighting is an expense, and cash payments are made. So in that case, cash goes out. So credit what goes out. So in the if it is a real account, we will credit if it goes out. Here cash goes out, so we are crediting lighting. So the payments are credited because cash goes out, and the receipts are debited because cash comes in. So receipts and payments account is a real account. Now let us see the example of income and expenditure account. The income and expenditure account, on the other hand, is a nominal account. The rule of nominal account says what? Debit all expenses and losses. So expenditures are debited, and credit all incomes and gains. So it is credited. Incomes are credited. For example, lighting is an expense, so it will be debited. And subscription is an income, which is a fee which is received from the member. It is an income, so it is credited. It is a nominal account, so all the expenditures are debited and all the incomes are credited. The second point of difference between a receipts and payments account is that receipts and payments account is a summarized form of cash book, and income and expenditure account is similar to the profit and loss account of a business entity. So let us see with an example here. Now, if you see at this receipts and payments account, you will find that there are the receipts, the total receipts of cash are shown on the debit side. That means, for example, the total subscription received during the year is 10,000 rupees. Then the total sale of furniture is 5,000 rupees. Then the total rent received during the year 2019 is 12,000 rupees in cash. Then salary paid during the year in cash is total salary paid during the cash. Total salary paid during the year is in cash is 12,000 rupees. Lighting expenses paid during the year is in cash is 1,200, and total furniture bought during the year is worth rupees 10,000 rupees. Then for building, total expenditure in cash made was 1 lakh rupees. So it is a summarized form of cash book. It is similar to the cash book, but this is generally prepared at the end of the year, and it is a summary of the cash book. If you look at the income and expenditure account, it is similar to the profit and loss account. It is similar to the profit and loss account. If you remember last year in class 11, when you made the profit and loss account, we debited all the expenditure and we credited all the income. So if you look at it very carefully, salary is an expenditure, so it is shown on the debit side. Lighting is an expenditure, it is shown on the debit side. On the other hand, the incomes, for example, rent received is an income, it is shown on the credit side. Subscription is the fees which are received from members of the organization, so it is an income, so it will be shown on the credit side. So it is similar to the profit and the income and expenditure account is similar to the profit and loss account. Now the third difference of receipts and payments account and income and expenditure account are: receipts and payments account is prepared on cash basis, and income and expenditure account is prepared on accrual basis. Cash basis means it records only on the basis of cash. When cash is received, then only it is recorded in the accounts, whether it does not consider the time. If you are so for example, if you are preparing for 2019 and you are preparing, for example, for payment for salary, suppose you have paid the salary for 2020 also, it will be taken into account because it is recorded on the basis of cash. But if it is on accrual basis, that means even if the cash is paid for 2020, but that in the current year, even if it is paid in the current year, but it will not be taken into account, it will consider only the salary of 2019, that is on accrual basis. So let me just give you an example, it will be more clearer. If you see at this example carefully, you will see that salary paid during the year ending 2019 paid in cash is 11,000. So in 2019 you have paid salary in cash 11,000. Now out of this 11,000 rupees, 1,000 rupees was for the year 2020. This is paid in advance for the January month of 2020. So this 1,000 rupees is paid in 2019. So it is there in that 11,000. And the question also says that there is an outstanding salary of rupees 2,000 for the current year. Current year means it belongs for the year 2019, which is not paid. So it will not be there in this 11,000 rupees. So if we record it on cash basis, then we will record only, if we are recording on cash basis for 2019, for example, then we will record only 11,000 rupees. And we will also include that 1,000 rupees which belongs for the next year, because the cash has been received in 2019. So when we are showing in cash basis, we do not consider time, but we consider how much cash was received during that year. Only that is recorded into the account. Now if it is on accrual basis, the same example, if we take it, then we will show on accrual basis. If we are preparing for 2019, then we will take into account the salary for 2019, whether it is paid in cash or not. So to show this on accrual basis, we will do it this way. We will take the cash which was paid in 2019, 11,000, out of which we will remove that 1,000 rupees which belongs for 2020, which is paid in advance in 2019. Suppose we are recording it for 2019, so we will take that cash which was received in 2019 and we will remove that 1,000 rupees which belongs for 2020. Then we'll get here as 10,000 rupees. Now this is the cash for 2019, which is paid as salaries, pure cash, which is paid as salaries during the year. But there is also an outstanding of 2,000 rupees, which actually belongs for the current year itself. This also is for 2019, but it is not yet paid. So our total salary for the year will be 12,000 rupees. So this will be recorded on accrual basis. On accrual basis, we consider time, but we do not consider cash. We will show the total salary, but we will not include the amounts of other period. It will be purely for 2019. So this is the difference between accrual and cash basis. Now when we show this into our accounts, then it will be shown this way. The receipts and payments is on cash basis. So during the year 2019, the cash which was paid as salary was 11,000. So it will be recorded as 11,000 rupees. It will even include that 1,000 rupees which belongs for 2020. Now, if it is on accrual basis, income and expenditure is on accrual basis. So we will take that salary which was, because we generally prepare this from the receipts and payments account, we'll take this 11,000 rupees. Then we will remove the 1,000 rupees which belongs for 2020 because we are showing it for 2019. So if it is on accrual basis, we should not include for the other period. We will just include anything which is the salary only for 2019. So here we will remove this 1,000 from the cash of 11,000. Then the amount which is not paid during the year as salary is 2,000 rupees will be added to that cash of the cash salary of 2019, and the total will be shown as 12,000 rupees. So this is on accrual basis. So income and expenditure is on accrual basis, and receipts and payment is on cash basis. Let me give you an example, the same example with an income. Suppose subscription is a fee which is received from the members. In this example, let me read the question first. In this example, subscription received during the year ended 31st/12/2018. So we are concerned with 31st/12/2018. The subscription which is received is 13,000, out of which 1,000 rupees is an advance for 2019. This 13,000 is received in 2018. Our year of calculation is 2018. So the cash received is 13,000 for in the year 2018, and in that 13,000 of 2018 that is received in cash, 1,000 rupees is an advance for 2019, which is included in this 13,000. So 1,000 rupees from that 13,000 belongs for 2019. It is paid as an advance. And they have also said that 2,000 rupees is an outstanding subscription for this 2,000 rupees is an outstanding subscription for 2017. If there is no information in the question regarding the previous outstanding, that means last year's outstanding, then we always assume that it is paid in the current year. That means it is an outstanding of 2017. We will assume that it is paid in 2018. That means this 2,000 rupees in cash will be assumed that it is paid in 2018. It will be included in this 13,000. So we should remember that in this cash of 13,000, this 2,000 rupees belongs for 2017, which is an outstanding, and also this 1,000 rupees is an advance for 2019, which is included in this cash. So you just remember that 1,000 rupees belongs for 2019 and 2,000 rupees belongs for 2017. Now in this question it also says that there is an outstanding, that means the subscription for the year 2018 of around 4,000 rupees is still outstanding. That means it is not paid. So it will not be there in this 13,000 rupees. We won't have this 4,000 rupees. So this is not yet paid, which belongs for the current year 2018. Suppose we are preparing our account for 2018. If it is on cash basis, then we will record only 13,000, which will include that advance of 1,000 also, this advance of 1,000 also, and it will also include the amount of 2,000 rupees which belongs for the previous year also. So it will not consider time, it will consider cash which is actually received in 2018. So that under cash basis it will be recorded as 13,000. If it is recorded on accrual basis, then we will take that amount of received during the year is 13,000. If it is on accrual basis, we will remove that 1,000 rupees, which is as an advance for 2019. And then we will also remove the outstanding subscription of 2017. So it will give us 10,000 rupees here, plus that outstanding, which is belongs for this year of rupees 4,000 rupees. Just remember, it is 10,000 rupees. Now this 10,000 rupees is the pure cash after removing that 1,000 and 2,000 rupees. This is the pure cash of 2018 as subscription, plus that 4,000 rupees which is not yet received from the members. Actually, it should be the income of 2018 itself. It is an outstanding. So it will be added. So your total subscription for the year will be 14,000 rupees. So this is on accrual basis. On accrual basis, we'll record it as 14,000. On cash basis, we'll record it as 13,000. I hope you are clear with what is accrual and what is cash basis. So if it is shown in the form of an account, you will find that receipts and payments is on cash basis. So if it is for 2018, cash received during the year as subscription will be 13,000, which will include that 1,000 rupees which belongs as an advance for 2019, and also the 2,000 rupees which belongs for 2017. These are all included in this 13,000. If it is on accrual basis, then you can see it is written as 14,000. We will remove this 1,000 rupees which is an advance for 2019, and this outstanding for 2017, 2,000 rupees will be removed, and this 4,000 rupees will be added because this is not yet paid, but it is for 2018. So it will come to 14,000. This is the total subscription, and this is on accrual basis. So accrual basis considers time. That means we are recording it for 2018. So any income or expenditure belongs for 2018 will be recorded whether the income is received or not received, or even if it is an expenditure, whether it is paid or unpaid, it will be recorded. But we will not include for any other period. Let us see the next difference. Number 4, receipts and payments account includes recording of both items of capital and revenue nature. So you remember this carefully. Receipts and payments account take capital items also, and they take revenue nature items also. Income and expenditure account, they take only revenue items. You'll understand this better with an example here. Now, if you look at the income and expenditure account here, you will find that subscription. Let us see the receipt side. You will see that subscription. Now, subscription is a regular income which is received by not-for-profit organization. It is received regularly, so it is a revenue nature. Then sale of furniture is not regular. We don't sell furniture often. It's 5,000 rupees. I hope it's 5,000. Yes, this 5,000 rupees is it's not a regular item. It is a capital nature item, but still it is taken in the receipts and payments account. Rent received is received regularly, so it is a revenue nature item. It's a recurring nature item, so it will be taken in the receipts and payments account. So receipts and payments account take both the revenue nature also, the capital nature also. You can see the expenditure side also. Salary is a revenue nature item. Regularly you have to pay salary. Lighting also regularly is a revenue nature item, but furniture is a capital nature item. Building is a capital nature item. So receipts and payments account take both revenue as well as capital nature item. On the other hand, if you look at the income and expenditure account, you will find salary is a revenue nature item. Salary is a revenue nature item. Lighting is a revenue nature item. So they are taking only the revenue nature item. They don't take capital nature item. Subscription also is a revenue nature, and receipt also is a revenue nature. Here in this account, we take only revenue nature item. So receipts and payments account takes both revenue nature items also and capital nature items also, and income and expenditure account take only revenue nature item. I hope with this video you might have understood the meaning of not-for-profit organization and the way they maintain their accounts and the difference of receipts and payments account. This will help you. If you understand, it will help you to solve the numerical problems. Thank you.